universe, obviously you can't be loosey-goosey when you're dealing with that many numbers. No, it's not 100 billion. No, don't be ridiculous. But anyways, that you know, when you're dealing with big money, no one wants you to lose, because even a small loss is actually a lot of money. So what the world needs is someone that is patient, is disciplined, can trade what they say they're going to trade, do it with little risk as possible, and slowly grow their trading account. You know, and what and you know, and a 1% month with big money is big money, right? Right? What if your 1% a month was $10 million or $1 million, let's just say? What if it, like you make $1 million a month, right? So anyways, there's a lot of people that have that kind of money to invest into a foreign exchange trader. So, even if you have a $5,000 account, trade as if it was a $100 million account, like you needed to impress somebody that could invest $100 million or $10 million. Or 1 million, whatever your number is, right? Stop trading like an amateur. I mean, just a whole mental shift. Just be a professional. Decide to be a professional. Just change your point of view, change the way you think, change the way you act. Right? You see what I mean? And then one day you might meet somebody similar to that, and you want to be able to impress them. So anyways, without further ado, let's get going. Let's play the happy music. Happy December 7th. Is that Pearl Harbor Day? Is it the 7th was Pearl Harbor? Is it? Yeah. It's fine. I didn't even realize. See, that's what happens when you're not like plugged into news feeds. I'm sure your Google account is emailing you like crazy about it. That's interesting. I mean, so anyways, December 7th, 2016. So that's what was it, 75 years ago? Dang, that's interesting. So it's Wednesday anyway. So we got oil inventories. If you're not on CAD, you're trading so sad. So let's get going. Let's play the music. So welcome to Forex.Today. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. My name is Wayne. I'm a currency trader. Been doing this a long time, and I love it. Many years ago, I fell in love with being a currency trader specifically. Never really was a stock trader. I bought Apple at $6. I bought Bank of America $5, but that's not really what I do. I've traded gold and oil and the 10-year T-note and some other things, and I find it fascinating in a Newtonian physics/economics world point of view kind of thing. But then I've boiled it all down to macros and just really the way things are taxed in the United States too. In particular, I boil everything down to Forex. I think Forex, I dream Forex, I walk it, I talk it, I love it. And I'm very happy to have you in my life and share some of that experiences with you. The overriding goal of helping you become a success sooner than later so you can grow your trading account and eventually your lot size at TradersWay.com. Right? Do these sessions 7:30 in the morning, Monday through Thursday, here at Forex.Today, and every Friday at FX Street. There you need to be a premium member. I'm also Forex Speaker of the Year. Thanks to you guys. So again, thank you for your respect and your loyalty. I appreciate it. So let's get some Forex on. And a significant amount of stuff going on. No. A little surprised. I guess we're all waiting for the Fed meeting and stuff like that. A lot of banks on hold, huh? So you can see what happened yesterday. Up, down. Look at New York. No higher high, no lower low. That's an inside job, right? An inside day. Kind of broke out, kind of pulled back, kind of broke out again. Here we are. Right? Profitable here, not profitable there. Okay. Just been kind of moving sideways, right? Luckily, I've picked the bottom and the top. So, yeah, you add them up, you can see this one is that much profitable. This one is that much of a loss. And I've been sitting on this, not making money for about 4 days now. Nice. Nice. Very nice. I know these things happen. I know up this one up here. I know, I get it. I know. But this one down here is not bad, right? What are you gonna do, eh? What are you gonna do, bro? So, and that's kind of how it feels like for the last few days. Now, it's amazing that it's that slow at the moment. But one thing that you should kind of train yourself to do is always check these bigger charts when you're consolidating on a shorter time frame, because sometimes all it's doing is waiting for the 21 to catch up. Now, where we are, if we're trending, this 5 EMA needs to push us up and make a higher high today and tomorrow, right? And let's say in the next 24 hours, okay? Right? See how there's, like, let's start with this bullish engulfing candle. Look at the pullback, that 50% pullback, right? And then it went up and then went up again, right? And then down for a day and a half. But it's just a fib of this. Same thing, up for 2 days, down, 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 up, 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 down, 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 down. So if it doesn't kick off this 5, and you really have to zoom in here now, the 5 is supposed to push it up, okay, and break through this high. Okay, that's what it's supposed to do. If it doesn't, then what it's going to do is either fall or move sideways until the 21 catches up. I would imagine it comes down to like this weekly S1 area. If the 5 breaks, we probably come down here. And then range, which then makes us vulnerable to a drop. We start doing things like double tops on the daily. La, la, la. Okay. And the whole time I'm trying to filter this with the question of, is this the top? 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 Is it because we don't want to get through 114? So if I get taken out of this, I might watch it go from 13 something down to 12 or 11 something. But it may change me from a bull to a bear. So this is why I'm really watching this daily 5. If I'm going to stay a bull, I really need this 5 EMA to push us up. As long as we're above the 5 EMA, I have no problems in the world being a bull. I'm a bull. I'm a bull. I'm a bull. I'm a bull. It's not a problem. I'm a bull. It's not a problem. It's not a problem. We break through that, it's a problem, right? And it'll probably come down to here But I'm going to have some serious doubts if we drop back there. Because remember, I'm expecting yen strength in the next 4 to 5 weeks. And it could start now. This may be it. So if it drops to the 21, typically what do? Typically I buy. And I may buy it. But, and that's a big but. But I'm going to have my doubts about, a higher high. To have this drop down to 111, to think that it's going to go above 115, I don't know. I think you'd have to be a gullible. Yeah, 1941, December 6, 1941, or December 7, 1941. Yeah, so 75 years for the, wow, that's amazing. So anyways, you got to be very careful this time of year, right? S&P 500, it's supposed to make a higher high, right? So what if it doesn't? Okay, that's an all-time high, essentially, right? So what if that is the 2016 top? So Ryan says we haven't gone very high to get a lot of selling. So maybe do we really drop all the way back to 101 or something? Uh, Again, I don't know, right? I mean, that is the most honest answer. I don't know, but I need to be ready. So like last year, we talked about it very casually. The yen's going to get strong in January. The yen's going to get strong in January. I mean, we talked about it a gajillion times. Did I know it was going to get ridiculously strong? Right? So I could casually say, yeah, get ready. In the next couple of weeks, we'll buy Japanese yen. That's what we did last year. Get ready. We're going to buy some Japanese yen. Did I know the velocity? No. Did I know it was going to fall that far that fast? No. Have no idea. Right? I'm just out there on my surfboard waiting. Eric, hey, this looks like a good wave, and you start paddling, and then all of a sudden you look back, you're like, oh, mother of, look at that wave! Oh my God, I'm in front of that wave. Oh my God, right? Yeah, and you just thought it was a good wave, and by the time you were riding it, it was way bigger than you thought. But you're still not getting off. You know what I mean? Yeah, tsunami. But you're surfing this wave, and you're like, if I get off this wave, I die. Right? So stay on your board. That's all. So that's it. I know what I'm waiting for. I know what I want to do if it happens. I don't know when the wave and all that kind of stuff. Right? It's just I'm going to try to catch a good wave, and after that it happens. It just happens to be the wave is in control, not me. I guess is the other way of looking at it. Right? No matter how much I splash the water, I'm not making the wave. I can't control the wave. Yep. All right. So, anyways, this is the S&P 500. If we kind of want to continue the trend upward, so let's say this move here from June. Okay. This move here from June, and then the second move here in October. Let's call this up, and let's say along the way somehow sort of correlated, or the yen pair is going up, right? So the yen pairs really started going up sort of in this period, but you know. So, let's say they're somewhat related. If that's the case, if we want the yen pairs to go a few hundred pips more, so let's say Kiwi yen from 81, I think we talked about yesterday, buying it at 81, the target was 85. So we're at 81.50 now. If we want that to go another 350 pips higher, maybe we need the stock market to go a little bit higher too, right? So we got to watch these things and be prepared, or ask yourself a different question. Will the Kiwi yen go 350 pips higher if the stock market falls? How about that as a question? Right? What is that correlation? Well, by the way, I know you've been having trouble uploading your trade plans the last several days, but I believe you have no problems now. Yeah, good. Well, it's one of these things you decide, hey, let's make a small change to make it so much better, and then all of a sudden it stops working completely. You're like, oh, that's not what I intended. But, so I don't know. So yeah, wouldn't it be nice if we can get above here and make some new higher highs? How about this as a different point of view as analysts now? Okay, we're discussing this as mastered. No, forget it. So, anyways, what if uh, instead of needing this to break for it to go up, if that is the top of the year and it's profit taking now all the way to, let's say, the Fed rate hike, and the Fed then also says something that spooks the market, more profit taking, right? Does this come down? How about a different point of view? Again, where's the new money going to come from? Are new investors coming into the stock market to say, now I want to buy? Now is a good time? Now that we're double topping at an all-time high, now I want to get in? And, I've seen stranger things happen. Remember, most investors are stupid. So yeah, this would be the great time to buy it at the top, right? For most stupid people. They're not stupid. They just don't know. But then there's people that know that still do it. So then they're stupid. But what if that we don't get new money? And what if some people do want to book profit? So for example, what if last year you lost money in 2015? So in 2016, you're very desperate to book the biggest profit you possibly can. So you book your profits in December and you send out your performance history or your annual report or whatnot, showing the big win this year. You say last year wasn't good, but look at this great year that we've had because you made the right bets this year, right? So you want to book your profits in December, and probably sooner than later, because what you don't want to do is have a, let's say a 30% year turn into a 22% year because he had a bad December because he didn't get out, right? So you want to book it as soon as possible. And so maybe we carry this down. Now, if you've been having winner years, year after year after year, you might want to defer some of your profit taking until January so that you can defer your taxes until 2018. Okay. Yeah, James says there's still a lot of money on the sidelines, and I was surprised actually because I was talking to a wealth manager a couple of weeks ago, and I think he said like 40 or 50 or 60. I mean, I can't even remember the number now because it was just flabbergasting. But most retail money is still not in the market. But again, that's what dumb money does, dumb things. They ride the markets down to the bottom, then get out, and then never get back in, right? And we're in that situation, except it's millions of people that are not in the stock market yet. Now, the scary thing is, what if they never actually get in, and then grandpa dies, and he has very little in the stock market, and his grandchildren, you think stockbrokers and everybody on Wall Street, they're all evil, and buying the stock market is for bad people, right? Capitalists are bad. So what if they never get in? Uh-oh. Because it's kind of, right? You kind of see our entitled world, right? Telling your child to look out the window as you drive your car is a form of punishment. Dad, well, why can't I use my tablet? Right? So anyways, capitalists are evil. Well, wait till you find out what happens when no one invests into your company so you can buy equipment. Good luck. Good luck without capital, huh? So, okay. But there is a component of my economic system that will have the government invest into families so that the society has a sense of well-being, but also better health and better education. So, for example, my kids and then my friends' kids and stuff. You see the difference if there's one parent home all the time, and when the kids get home from school, they have a healthy snack, and then they do homework for hours, and then mom or dad takes them to the like my kids are on the robotics team, my kids are on the science olympiad team, they do music and arts and sports, and if you're I mean, so they have a pretty amazing advantage over a household that maybe only has one parent, like what I grew up with, and that parent has to work, or both parents have to work. How are they going to get to all these meetings? And who's going to do their homework with them at 3 o'clock in the afternoon, right? So my society would try to invest in or incentivize a way to have a family structure like that, because I think in the end you'll have smarter kids and healthier kids. Yeah, and James says that's been missing for a couple of decades with two-income families, right? So I'm actually saying, to have a government program, maybe taking money away from the military and investing into situations where you have a married family, because you need the stability. So marriage is part of it, not for religious reasons, right? And that in a situation, the government would want to invest into that family so that one of the parents doesn't have to work, so that there's stronger parental oversight of children, which would lead to things like hopefully better education, better health, you know. But the family should be 3 children or less. The children need to meet academic standards, which are government level, which are usually pretty pathetic, and the children need to be immunized. So that's just a small part of the system I'm designing for Harvard. Yeah, kind of neat, huh? But it's a capitalist system designed to create jobs and investment, and in particular, entrepreneurialism. Yeah. Yeah, thank you. Genius, genius, genius. All right, so let's go in here. Crude oil coming back down like we planned. So yesterday we talked, even though this was low, which was the plan from before. But anyways, we were here yesterday, and I said it would have a bigger pullback based on a fib of the bigger drop instead of the 1 hour drop, the 4 hour drop, let's say. So I have it marked down to here, then up to here, which is a fib of this top to that bottom to here, and then down. And it looks like I have it going to 52 and a quarter, and it didn't quite get to 52, but it's dropping. I'm not convinced it's actually dropping. I think it's just moving sideways, and we're all worried about the psychological level of 50. But I don't think we're terribly wrong, right? Freddie boy. It's because I call him Freddie boy. You there, Freddie boy? It's what Barney Rubble calls his friend Fred Flintstone. Hey there, Freddie boy, and a howdy do to you. All right, so anyways, and then we get down into here, and then this is sort of a buy zone around 50 unless it breaks, right? The other one being down here at 48. Okay, but I wouldn't be shocked, and you already know this, but I need to say it every day. I wouldn't be shocked if we're on our way back down to the mid 40s. I'm not thinking 43, but I'm thinking 45, 46, 47. Okay. So if we're going to go to Cuba and do a Forex trading event, why don't we also meet up in Baku? Anyone want to go to Baku? I think I'd like to go to Baku. They have a Four Seasons hotel there. Doesn't look that bad. I'm like, damn. What country is Baku? Is it Azerbaijan? Yeah. No, we'll go when it's hot. I grew up in Canada. I don't go anywhere cold unless the plane crashes or something. I've done enough cold in my life. Um, Euro Kiwi not doing a lot. Okay. We have this coming down. Well, it ain't going up. That's the first part, right? You see the little roll reversal going on here? Do 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 do. Just right. Then it'll go down, down, down to this area, and then it'll go up, up to that area, and then it'll go down, down, down. Do you know the longer you stare at this, you're going to look back and say, dang, right? It'll drop down to 8 and then 7. You'll look back and say, dang, it dropped all that way. Just having fun with the Euro Kiwi. But, and I think I told you this when I pulled this chart up, there is a little birdie told me, and I can't even remember where now, some expert on the Noki, that just strangely it gets very weak at the end of the year, like this. You see, this is 1 year ago, and for some reason it just went for no particular reason. So don't be shocked if we kind of double bottom here and then boom, we head back up. Who knows? So who knows? I don't really like little birdies when they talk to me. I say, shut your beak, you little. So let's take a look. Biggest loser, pound yen, 0.5% down. Biggest winner, euro pound, 0.65. These are not big numbers, right? It's a very benign day. Okay. So not a lot to get excited about, but you got to know your lines. You got to know where you want to buy. Are you going to buy the 4-hour 21 Aussie yen? It's a yes or no binary scenario. We're at 85, but it's not a typical setup, right? Because we're already supposed to be long and gone on a lot of these. And I think yesterday I called it, I described it as a boulder, right? Like it's getting heavier and heavier as we get to the top of the mountain. Um, you know, it's just not breaking out yet, is it? So and we got to be careful because it's a yen. If it does like this, right? You might it may be it. That may be it. I mean, it could be the top of the Aussie yen for the rest of the year. And it may be interesting, like if that's the case, we might be selling Aussie yen for the next 5 or 6 or 7 weeks. Right? I mean, that's what we're looking for. A top is where you take profit, but we can also get short these things. And I just never know if it's that, but it's not acting as bullish as we'd want it to, right? So here it is on a 4-hour chart, right? But what if we find ourselves below these gray lines tomorrow or today? I mean, we're on the gray lines now. We're supposed to be buying, but you notice how you can see through the alligators? The alligator pit, right? You don't want to be in the alligator pit because you're going to get bit. I mean, we're getting bit now, aren't we? We're ankle deep in alligators, man. So it better giddy up if it's going to go up. If it ain't going to go up, what point do we stop buying and start selling? Well, and once again, I want you to think about the S&P 500 at a double top on a daily chart at an all-time high. When do we get shorts? Okay. Ryan's using Nikkei. That's fine. But remember, this isn't necessarily Nikkei, but obviously looking at Nikkei is the right thing, but it's not everything. The yen's going to get strong when traders take profit. That's it. And regardless, of anything. And if the yen gets strong, the Nikkei comes down. And it's usually, it's that way, not the other way. It's not that Nikkei is going up so the Japanese yen gets weak. You could argue that, but I would argue the other way around. When the yen gets strong, the Nikkei falls. Right? You might say, oh, well, the stock market's going up in Japan. Everyone feels good. Everyone, wants to take on some risk, and they start investing internationally, and the yen weakens. Okay, fine. But I'll say it the other way. In times when the yen strengthens, and that could be for fear reasons, but it could just be business reasons, like taking profit in the internationally for whatever reason, or repatriation based on fiscal year end like Japan does in the late spring, right? Those are business, let's say business cycles, right? The yen can get strong, and that will hurt the Nikkei because it reduces the profitability, and so the stock market comes down. So I'm just sort of predicting, even though it hasn't happened, I'm predicting the future. Of course, it hasn't happened, but by the time it happens, you'll say, "Oh well, I should have known the Nikkei was going to come down," right? So it's just we're in this area where it might happen today, it might happen tomorrow, it might happen in 3 weeks, but it just feels to me, and maybe I'm wrong, right? Maybe I'm filtering this with confirmation bias, but it doesn't feel like it's as aggressively up like it was a week or two ago, right? Okay. So does that mean we're consolidating? Does it mean I should sell? Well, I'm not a seller. I mean, when I'm looking at like CAD yen, we're above the 4-hour 21, but just above. On the Aussie yen, we're just above the 4-hour 21. Kiwi yen, well above the 4-hour 21, trying to make higher highs. So we should probably go to that one because I think I have that one as a breakout. Okay. Euro yen above the 4-hour 21. Pound yen below the 4-hour 21. Hmm. Oh. Right? Hmm. So why is the British pound coming down? Huh? Anybody? You'll be shocked at how complicated the analysis is. Why is pound weak? Like pound dollar. Boop, boop, boop. Well, let's do this template. See? I'm calling it like an R scenario, that it hit the monthly R1. So here was, let me move it back because I was calling it out, but maybe if I actually use charts, it'd be easier to visualize. Okay, we're looking at 4 hours here. Okay, still above the 21, still above the 21, still above the 21, still above the 21. Okay, what is the strongest currency right now? So what you just did is a relative strength exercise. What is the weakest currency here? Pound. Okay. What's the second weakest? Yen. What's the third weakest? Oh, sorry. Right. So you should be able to do this all the time. For some reason, it ain't switching. There we go. Okay. You should constantly be looking for that. That's a relative strength exercise. So Kiwi yen, Kiwi dollar, pound Kiwi, right? So new chart. What do you think of that? Is anyone going to trade this for a while? So how many people do that exercise every day before you even look at your charts? Or let's say before you trade? Anybody? Because now you're trying to trade the strongest currency versus the weakest currency, for example. Maybe your odds are going to be improved. Dom constantly. Marina, yeah. Figured you'd be on this one, Marina. Yeah. Yeah, I figured next time I'm in South Africa, I'll probably be in Cape Town, huh? Right on, Marina. Marina's good class. Cool. Class and style. All right, so it is a quiet market, as you can see. You should be able to look at your weekly pivots and stuff. You should have a sense of all this. So let me tell you, when I first started, um, I wonder if I can find a picture. I ran into the book somewhere, but I used to have this process when I first started trading. Now, remember, when I first started trading, your trading platform, your Forex trading platform that your broker gave you, didn't have charts. And you think you have it tough now, huh? So I had charts, but before I looked at charts, I would log into my brokerage account, and it would give you data that you could even, you know what? I don't think I could even download it. That's right. All right, so let me take you through my process when I first became a Forex trader. In particular, when I quit my job at the firm and started trading on my own, I had this routine. So I would log into my brokerage account, and it had tables, and it would tell you certain things like volatility and range and stuff like that, right? And I took volatility. I think it was volatility. It might have been something else, but it would have been similar to volatility. But it gave you a number. It was sort of like what currency pair moved the most in the last time frame, whatever it was, a day or something, right? So I would log into that. Remember, I don't even have my charts open yet. And I would open up an Excel spreadsheet. And I had a template designed where it had all the currency pairs high to low, in rows. And then I had columns of the same currency pairs. And I would plug in the numbers of volatility overnight. So I'd look at the broker and it would say 8.374. And I type in, for pound yen or whatever, 8.774. And then I would look at pound dollar and I'd get that number. And then I would look at pound Swissy. And then, you go through this whole process, and then you'd look at US dollar versus yen, US dollar versus Swissy, US dollar versus euro, US dollar versus CAD, US dollar versus, and you're just going through and you're plugging in these numbers. I would spend, I'm sure, an hour going through and plugging all that data into my little spreadsheet. And from that, it would tell me relative strength based on that number. Okay. I don't think it was volatility, but it was something. But we'll call it volatility. So you put all those numbers in. And finally, what I was doing was isolating the pound versus everything, the Swiss franc versus everything, the dollar versus everything for all the major currency pairs. Then my next step was to line them up from left to right, strongest to weakest. So, and I actually had this, it would all print out and everything. And so I might find, in this case, the Kiwi very, very, very strong. And way on the right-hand side, the pound very, very, very weak. Okay? And then I would look at the spread. Because the spread's so low now, you probably don't really care that much. When I first started trading, spreads could be very big. So I might not trade the pound Kiwi because the spread could be like 19 pips or something back then. Okay, there was a big difference. Okay, the market, you have to realize too, it was really before retail traders, so the market was way different. I mean, if you could only see through my eyes, right? The things I've seen, it's a radically different market than it used to be. And so one of the big things was spreads. Like even I think pound dollar was like 7 or 8 pips, and pound yen was even more, and it was it was difficult, man. I mean, and it was real money, right? Um, so anyways, I would do that and I'd organize them left and right. And then I would analyze my cost of trading. Okay. And I would filter down. So let's say pound Kiwi was the best trade, but maybe my second best trade that was almost as good, let's say, was pound dollar. Let's say they were within 95% of the same goodness of setups, right? But the pound dollar was way significantly cheaper to trade than the pound Kiwi. So then I would probably start with the pound dollar first. You see what I mean? So anyways, I do all this analysis and I add them up left to right, and then I do a cost basis analysis, right? And I come down and I would say, okay, I want to trade the pound dollar and whatever, right? And maybe Kiwi dollar or Kiwi whatever. No, pound dollar and Kiwi yen or something, whatever. I'd boil it down to 2 or 3 currency pairs that I am interested in trading. Okay? It would take me, I'm sure, an hour to do this. I did it every day. And then at the bottom of this paper, there was a spot to show how many pips I made. And I had to document this. And I did it every day. I printed it out. I went to the store, and I still remember doing this because I've only been in Office Depot like 3 times in the last 30 years. One of them, and it's funny because the store hasn't changed, right? But anyway, so I was in recently, and I remember doing this. I went in, and I bought a 3-ring binder, leather. Spent like $40 buying a binder, leather binder. And then I bought the little dividers so that I had dividers for weeks and months. And so at the when I was done trading for the day, I'd have the winners and losers written down there, and let's say I made 30 pips, right? There'd be like a plus 30. It was handwritten, right? But plus 30, and it felt really good to end the day. How did I do? Plus 30 pips. And then I would put it in the binder. And I've run into this binder a couple of times over the years. I have it somewhere. But you can flip through it. Plus 30, plus 28, plus 100, minus 22. Just day by day by day by day by day. So anyways, so I got to the point where I picked out 2 or 3 pairs that I was very interested in trading for the day. And then I opened my charts. Now, you guys do it differently, I think, where you open your charts, you're like, oh, look at the moving average cards over. I think I'm boom. And you're already in a trade. And I'm like, oh, my God, you've sat down, and in less than 4 minutes, you're in a trade. Why did you trade pound dollar? I always trade pound dollar. Like, why do you always trade down pound dollar? I don't know. I like it. I like pound dollar. Seems funny, doesn't it? Funny how? Like a clown, right? Why'd you sell euro dollar? I always sell euro dollar. That's what I always do it. Well, you know, why is and it's just like automatic. Just so there, I think there's a big difference, right? Where I'll do an hour worth of analysis to find out the highest probability of success before I even consider technical analysis. No, so then you would have charts, Ryan, but you had to pay for it, and it was a different service. And then you'd open your chart and you'd say, okay, pound Kiwi. And this is back when I probably didn't even use the 2155 yet, or I used 2060 for the longest time. So I probably had a chart that looked a lot like this, actually, thinking about it. And I would look at it, and if price got into like, I don't know, let's be conservative, right? Let's say if price was back up into here, or the 21, right? Let's say, or I wait for it to be overbought here, whatever. When I see it kind of in the place I want it to be, then you gotta like move it over, right? Get it out of the way, and open up your your trading platform, and then place your trade. Okay, and then you'd go back and say, all right, so I shorted here off the 21. Great. Okay, where's your stop? Okay, well, my stop, I guess, and then you go back to your trading platform. It's 176.95. So, whatever. And they're like, okay, there's my stop. Or the other way around, you're like, I want to sell at 176.80. Okay, and then you go back over to your platform. 1.7. Oh wait, is it 1.7? Sorry, 1.76. Is it 80? Then you go back again. Yes, 880. Did I type that right? Yes. Enter. Oh crap! I didn't enter the right lot size. And then you get, oh man, it was really slow. Try scalping, right? Try scalping when you can't trade on your chart. Okay. But it was interesting that back then, though, like CPI would come out and the market would move 100 pips. Now CPI comes out and they're like, there's very little reaction. Yeah, Marina, whatever process will keep you successful, I would recommend you do it. It's that routine, and maybe I'll find that binder again. It's in a box somewhere, and I think I know it's behind me, but I could show it to you, or maybe I'll take a picture on my phone and pop it up. But it was, I believe, the routine, sort of like the Market Wizard story about the guy being interviewed for the book, and while he's being interviewed, he's doing his spreadsheet. And so Schwager says, well, why do you do this every day? And he's like, this is what makes me successful. That's it, right? Yeah. Well, here's the other thing. So Marina says it's not guaranteed. Well, here's the other thing. You will also note that you're always looking at past data. So just because the pound Kiwi has been in a strong downtrend doesn't mean it has to fall today. It just means it has been falling. All right. So you got to be careful. Because I believe it's a form of trend trading where you're recognizing that the pound Kiwi has dropped a lot recently. So for you to try to get into it, okay, but you could have lost money all week preparing to sell this thing, right? And news will change everything and change the volatility and stuff. Okay. Another thing you can get caught on right now, we have low volume and volatility while we wait for the Fed, and what may happen is something might come out statistically, let's say much higher volatility than everything else, but that number could also just be low, and it looks artificially high because everything else is just less. And then all of a sudden we get what we're waiting for, and the market just pops, and you're completely in the wrong pair, right? So I don't know. Just be smart about it. At least at a basic level, ask yourself, all right, is the pound strong today or weak? And if you can't answer it, it's neutral. The pound is weak today. All right, so let's say you like to trade the pound. You're like, oh, good, pound is weak. Find things to sell the pound against. And that's how you get to like a pound Kiwi. And then what else would you consider? Pound Swissy. And then what else would you consider, right? Just the simple process of doing relative strength, I think, is smarter. Euro pound, pound Kiwi, pound CAD, pound dollar, pound Aussie. Yeah. Yeah. what you're really saying is pound is weak. So cool. Pedro has a question. Well, Pedro, depends on how serious they are about the what they say, and or if they say something that is interpreted by the market that they are going to make a change, like they are going to stop raising interest rates, or they're going to start raising interest rates, or they're going to stop cutting interest rates, or they're going to start cutting interest rates, or that they're going to neutral, or whatever the policy change is. If it's a change in policy, then the market will move. So they might say, all right, well, you know, we think the Kiwi is overvalued. Fine, great. But it's still likely to go up unless the market believes they're going to actually do something about it. Okay? Yeah. It's all about future action. So you've seen over the recent years where like New Zealand will, let's say, raise interest rates and the value of the Kiwi falls. What kind of scenario would create that? Because you'll say, well, in my textbook it says interest rates go up, the currency appreciates. But if everyone thinks it's, they're not going to do another one, then it's over. Okay? You know what I mean? So it's always like whatever just happened was probably predictable and has already been played. So it's always the next thing. So what's New Zealand going to do to weaken the New Zealand dollar? And there's probably not anything that they really can do unless cutting interest rates further. But I think that game's over. That's so last quarter, right? So right now, when we look at Kiwi, like Kiwi yen is ripper strong. Okay. Look, you can move your stop now, by the way. That's what this is, I'm sure. Okay. Or even here. Okay. Right, but right, Hojo, it's not that they already have. It's like, what else would they do? Would they do it again? Is Australia going to cut interest rates again? Well, they've had their chances and they haven't, right? So it's always the next move. So slow day. Let's stay alive. Peace on earth. May the pips be with you. May your profits be above average. Today is not a good day to lose a lot of money, so don't do anything stupid. My helicopter's coming, so I got to go now. So peace on earth. May the pips be with you. May your profits be above average. See you tomorrow.